Coming up on Market to Market, Congress returns to D.C. with several deals needing to be done. Renewable fuels get a boost. Several states navigate the pipeline regulation process. And market analysis with Don Roose next.
What's next doesn't happen by chance. It happens when researchers and farmers work together to solve tomorrow's agronomic challenges. We're committed to creating what's next. Because at Pioneer, our name is our mission.
Sukup Manufacturing, celebrating 60 years of innovation as a family-owned and operated manufacturer of grain storage, drying, and handling equipment out of Sheffield, Iowa. Learn more at sukup.com.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.
This is the Friday, September 15th edition of Market to Market, the weekly journal of rural America.
Hello, I'm Paul Yeager. The economy may end up in timeout after this week's series of inflation reports, or at least in a cooling off period. Persistent higher inflation remains, and consumers are paying the price. The Consumer Price Index for August was driven 0.6% higher, mostly on fuel costs. Core CPI was up 0.3% when energy and grocery prices were removed. The Producer Price Index, the cost of goods before reaching consumers, also increased last month. The wholesale look was up 0.7%. Again, the gain was attributed to higher energy costs. Retail sales also rose 0.6% on the month because of higher gas prices. While Congress was gone this summer and on their recess, issues remained and some priorities changed. Farm bills have traditionally been chances for lawmakers from rural as well as urban districts to work with each other and with the other party. The soon-to-be expired legislation is stuck in draft mode. Colleen Bradford-Krantz reports.
The House of Representatives returned to Washington, D.C. this week. The majority party in the House turned their attention to launching an inquiry into the impeachment of the president. Other major items in need of action: the budget with a looming government shutdown and the expiration of the Farm Bill.
If I were answering your question in July, I'd be very positive. I'm less certain now about getting a bill passed by the end of the year because we don't have the text yet.
Field hearings were held in much of 2022 and early 2023, but since then the bill has been stuck in the writing process. The lack of movement in the Farm Bill, which could top $1 trillion for the first time, is frustrating to representatives in farm states. Commodity groups have mostly united in a continuation of various safety nets like crop insurance for producers. The biggest hurdles have been funding for the Supplemental Nutrition Assistance Program, where calls for major cuts are being made. However, an extension seems the likely course of action.
Farmers and people interested in the nutrition program, which is 84% of the Farm Bill, that means food stamps. You don't need to worry if we don't get a Farm Bill passed by the end of the year. We're going to extend the existing Farm Bill for one more year. Now, that isn't unusual for Congress to do that. It's been done many times on 5-year Farm Bills in the past.
The last extensions were made in the 2 years preceding the signing of the 2014 Farm Bill. For Market to Market, I'm Colleen Bradford-Krantz.
About 13,000 United Auto Workers Union members walked off the job Friday after a deal with the big three automakers expired. The targeted strikes are meant to give the union leverage in negotiations so that they can get back some concessions made a few years ago when the companies were in financial trouble. The U.S. automobile industry has also made some forays into electric and more fuel-efficient vehicles with mixed results in profitability. Renewable fuel supporters have since expanded their targets for new markets of opportunity. Peter Tubbs reports.
The market for sustainable aircraft fuel continues to grow, and the biofuel industry hopes it will replace biofuels usage as vehicles consume smaller volumes in the future. Secretary of Agriculture Tom Vilsack addressed the Growth Energy Annual Hill Summit this week and addressed the Biden administration's support of the fuel.
Did you notice recently what he said about sustainable aviation fuel and who's going to produce it? Did you notice he said his view that in 20 years or so, 95% of it's going to be produced by farmers? So we're working on the modeling to make sure that there's a broad array of feedstocks that can qualify, including ethanol. We're spending our own resources at USDA to make sure the GREET model is where it needs to be. We're working collaboratively with all the agencies that have to be worked on to make sure that we have a unified approach on this to back up the president's commitment. We understand this.
The industry is aiming at producing 2% of the aircraft fuel used in the United States by 2026. By some estimates, the renewable fuels industry would have an opening in the U.S. marketplace totaling 35 billion gallons. Cost may be a drag on the shift to wide acceptance of the biofuel. The current spot price for sustainable aircraft fuel is 35% more expensive than Jet A1, the primary fuel used in aircraft. For Market to Market, I'm Peter Tubbs.
Taking an idea to reality can be a long process. When $4.5 billion is the price tag and covers 2,000 miles, the effort to get to completion is substantial. Aligning landowners, corporate interests, and governmental requirements is a balancing act 3 companies have been attempting in trying to secure approval for new CO2 pipelines. David Miller focuses on the Summit project that is under the microscope in the Grain Belt. His report is our cover story.
When will Summit realize that we don't want their pipeline scanned?
For more than a year, a group of landowners and activists have been pushing back against the permitting and construction of the Summit Carbon Solutions CO2 pipeline. If it gets the green light, the project will stretch across 2,000 miles of 5 Midwestern states.
No eminent domain for private gain. No eminent domain for private gain.
Consultation, and you send them the
As testimony continued this week over the 672 miles of the Iowa portion of Summit's Midwest Carbon Express, the South Dakota Public Utilities Commission denied the Iowa-based company's request for a permit.
Staff filed the motion to deny the permit after it became abundantly and undeniably clear that Summit cannot obtain a permit at this time. And it makes little sense to go through the motions of a 3-week evidentiary hearing and all that would follow without a compliant route that can be permitted.
Edwards says she did not perceive the denial as the end of the road for the 469-mile portion of the pipeline. A move by Summit to drop a request for an exemption to recently changed county ordinances put them in a position for that denial. Some of those county rules changed in the last 6 months. In a statement from Summit, the company says it will refile for the permit. Summit officials also say 73% of landowners in the Mount Rushmore state have signed voluntary easements for the pipeline. Monty Shaw is the executive director of the Iowa Renewable Fuels Association, an ethanol industry advocacy group.
Sure. I'm not an expert in the South Dakota law or process, but obviously we're disappointed. Didn't even get a hearing. That seems a little odd to me. I don't really know why they denied it, but hopefully it's something that can be addressed, and then we can find a path forward.
Summit is already appealing an early August denial of their permit by the North Dakota Public Service Commission. The 3-member panel says the plan for the 320 miles of pipeline failed to meet its burden of proof to show the project will produce minimal adverse effects on the environment and upon the welfare of the citizens of North Dakota. The Peace Garden state is the final destination for sequestering the CO2 gathered along the route. A spokesperson for the company says they have 70% of the easements needed to begin construction. In Minnesota, A short section of the 150 miles of pipe was approved for an environmental impact study. The Minnesota-based rural environmental advocacy group CURE asked the Minnesota Public Utilities Commission to defer any action indefinitely due to the denial of Summit's permit in North Dakota. Depending on the completion of several studies and a public comment period, the Minnesota PUC would be in a position to decide on whether or not to issue a route permit as early as next summer. In Nebraska, the carbon capture company is negotiating with each county where the 320 miles of pipeline would run. A recent press release shows 50% of the landowners have signed easements. According to Summit, the pipeline will carry 18 million tons of CO2 annually and pull the equivalent of 2.6 million vehicles off the road while lowering the carbon footprint of the 30 ethanol plants participating in the project. Summit and other carbon capture companies like it are in a position to receive a portion of funds from the Inflation Reduction Act of 2022. The act provides the largest climate-related investment in U.S. history, with close to $370 billion dedicated to renewable energy. Included in the package are tax incentives to sequester carbon. To take full advantage of those tax incentives, construction has to begin by the end of 2025. The 2022 IRA raised the tax credit for storing carbon underground to $85 per ton. With Summit planning on sequestering up to 18 million tons of CO2 annually, they would be eligible for $1.5 billion in tax credits each year. The entire project is expected to cost $4.5 billion. There are still multiple concerns among the groups objecting to the Midwest Carbon Express.
I don't know about you, but I do not want my grandkids someday, if these CO2 pipelines are in an unzoned maze within my county, jeopardizing their way of life, to wonder, what the hell was Grandpa thinking?
These range from soil compaction in farm fields to pipeline ruptures. In response, Summit's Chief Operating Officer Jimmy Powell says there is a schedule for inspections of the line to stay ahead of any problems. The company is also talking with local fire departments about what to do in the event of a line break. The Sierra Club, a grassroots environmental advocacy group, has expressed worry the CO2 will be used for fracking, which could put more oil in play and increase greenhouse gas levels in the atmosphere. Powell has stated there are no plans to use the sequestered carbon at this time. The main sticking point for landowners along the route remains the potential use of eminent domain. This week, the Sierra Club's attorney in Iowa asked Mike O'Rourke, Summit's vice president of land and right-of-way, if there was any undue pressure being put on landowners.
Do you think maybe at some point they feel like you've just worn them down and they're just going to sign an easement?
So, I understand your question. I find it almost insulting to an Iowa landowner to think that that would happen. This is their ground. No one's disputing that. They're extremely educated about their ground. They're mindful people. We enjoy.
Testimony in Iowa is expected to be completed next week. According to an IUB spokesperson, a final decision on a permit will be made at some point after that, but there was no speculation on any kind of a timeline. For Market to Market, I'm David Miller.
Next, the Market to Market report.
As combines rolled this week, the variability in yield has both endorsed and contradicted the USDA report. The bearish market reaction has evolved to inside range trading. For the week, the nearby wheat contract increased 9 cents, while December corn lost 8 cents. The soybean sell-off met resistance at the bottom of the 200-day moving average. The November contract sold off 23 cents on the week, and December meal shed $9.30 per ton. December cotton found 53 cents per hundredweight. Over in the dairy parlor, October Class 3 milk futures dropped 80 cents. The livestock market was up. October cattle improved 370. October feeders put on 533. And the October lean hog contract added $1.60. In the currency markets, the U.S. dollar index rose 26 ticks. October crude oil improved $3.71 per barrel. COMEX gold increased $3 per ounce. And the Goldman Sachs Commodity Index increased nearly 15 points to settle at 620.90. Joining us now is market analyst Don Roose. Hey, Don.
Thanks for having me back, Paul.
Don, this wheat market, we hit a bottom, maybe. We rallied, then we fizzled. Are we going back down?
Well, I tell you, that was the one bright spot of the whole grain market this week, wheat and soy oil. But the wheat market, we did have a report on the 12th on Tuesday that was positive, took the world ending stocks down 275 million. We tried to press lower on the wheat market. Remember, in June, we topped out at $8, dropped to $5.70 on Tuesday, had a hook reversal. You know, our stuff, we were in a 6-week downtrend sell signal. That reversed, so that's a positive sign technically, Paul.
Globally, there's weather issues developing again, but not in the United States as much as Russia, Ukraine having drought conditions. Who knows what's going on in China? China not a big wheat producer, but what impact is that going to have on us here in the United States?
Well, I think that may have been the start of it. As you're alluding to, Canada had a dry drought situation. They're big wheat producer, but Australia is in a drought. Argentina's drought's continuing, and then we have the Ukrainian-Russia war. It looks like Ukraine's going on the offense, so uncertainty with the wheat market there. Remember, Russia's the largest wheat seller and exporter in the world, and they've just been clearing wheat at any price, so we got to get them to stop.
Production, here's the interesting note from the week. If we do end up with what is projected, it would be the first decline in global production in 5 years. So if I'm someone looking at pricing right now, what's a good thing I should think about?
Well, I think for an end user, it's probably the best chance to be pricing more than producer from trying to look for a place to sell. It looks like, Paul, that we've hit, or actually it looks like we scored a seasonal bottom on wheat. I think it's just a matter of what we do to the upside. You know, after you drop, $2.30 during the summer, it looks like the upside, the risk is to the upside, not the downside.
You talked about this report, the corn market. Those who are out combining, who've been looking at fields, are screaming, no way is this accurate. What are you saying? What did the market tell you?
Well, what the market's telling you is it's not sure. Since August 15th, we haven't gone anyplace. We've been in basically a 473.5 to a 490 trading range, tight trading range. I think what we're really waiting to see is what the yield really is. Remember, we dropped the yield in the last report. We're still over last year, if you can believe it. They still have Iowa at 200 bushel average yield. Our record is 204. You know, it looks like the yield's coming out of the field so far. This is what we're running into. Disappointing a bit in Illinois, Iowa, Minnesota, Nebraska, and probably better in Ohio and Indiana. But it's early yet. The combines will tell. And I think the other thing we really need, Paul, is for the end user to step up and start to secure supply.
Yes, that's been a discussion for people sitting in your chair the last couple of weeks. Nobody's selling anything. What are they waiting for? What should they be waiting for?
Well, the producer down at this level, I mean, with the insurance where it's at, he has no advantage in selling anything. You know, in fact, actually probably buy some courage calls in case it would happen to go up and cover some of the insurance to the upside. But there again, it looks like the corn market, Paul, that we're trying to see if we can, in the process of forming a seasonal low. We'll see. About 90% of the time we scored in the last 10 years a low between the 1st of August and the middle of September.
I'm guessing the early harvest is going to give us an early return of how good or not so good this crop is. Do you buy into that scenario? And if you do, what should you do?
Yeah, and usually short crops get small crops get smaller. And it looks like this yield, what we've had 3 reports in a row that the yield's gone down. So we're on direction in the corn and soybeans on that. But, you know, from a producer standpoint, at these levels, I think the biofuel people want to secure their supplies. The feedlots want to secure their supplies. Just a matter of when. What you've seen historically, Paul, is you reach this point where everybody gets nervous at once and starts to chase it. You know, producers not selling.
Yeah. All right. So in this bean market, because some of that same scenario, but we're still dealing tiny bit in places where this crop is still developing. Rain could fall. Or have we passed that window where weather really matters to the soybean market?
Yeah, usually this time of year we're worried about, do we get an early frost? Well, I think that's behind us. So, no, I don't think rain does a whole lot from here anymore. Harvest next week's going to start to get a little more aggressive in the week after that. But, I think there again on beans, we're trying to see at what point do we score a seasonal low.
You talked about this just a tiny bit in your opening comments, but this is a question that came from our friend Phil in Ontario, and he wanted to know, Don, soybean oil and meal sales have been reasonably buoyant lately, and USDA did reduce soybean yields slightly. How much hope is there for soybeans to lead grains higher, especially with the prospect of a 163 million metric Brazilian soybean crop about to be planted?
Well, I think he hit the nail on the head. It's harvest time here, and we'll see if the end users buy stuff. Brazil's in, they're in their springtime, so they're just planting now. They're going to raise a 5.9 billion bushel bean crop. We're 4.1. So I think what we're really looking at, does Brazil have any issues? Does our crop get smaller going forward? And the government, remember, they're continuing to reduce the yield, but they're reducing demand. Maybe the demand's not as bad as the government says.
Where do you anticipate the demand coming from, though, if it's different than what you're saying?
Well, I think it's mainly from the export front. Brazil's exporting 3.5 billion bushels of beans next year. We're supposed to be 1.8 billion. So, I mean, if we can steal just some of their business, and if they have weather problems, we could easily do that. So watch Brazil. They're just starting to plant. In fact, September 15th was the first time they could plant beans.
I sound like a broken record when I move to the protein complex, especially live cattle. Just when you think we've hit the top, we go higher? Triple top means nothing, is what our friend Chris Robinson said today. Do you buy that?
Well, I think where we're really at, we're in the classic run blow-off type of market. We're $8 corn, we're $18 beans, we're $15 or $10 wheat. It's a market that it's over when it's over. The packer, Paul, is still chasing these cattle. On Friday yet, across the Corn Belt, there were some cattle traded for the winter at 202, 203, big time basis over, big time numbers. And we also, you usually think that the commercial knows all. Usually the commercial's the last one in. So it's a bull market, there's no doubt about it, but the consumer's going to decide where the top is.
Is the bull still in control of the feeder market?
Well, the feeder cattle market has, had a bright spot just because the grain market's been moving lower. The fat cattle in those back months have been moving higher. So if either one of those things change, there are gaps below the market, which are targets on the feeder cattle, about $20, $25 lower. But, you need some kind of a chart top. It's foolhardy to try and pick a top because you don't know where it is. But it's a market that you would have to say it's very mature. This is the kind of run that I think the bulls thought could happen more so next April, time frame, but we're dialing a lot of it in already, Paul.
So we're accelerated 6 months?
I think that's the risk, is that, and for, the cattle guys out here, when your break evens are 196, 197, who would ever heard on new cattle coming in? The risk is if anything happens, there's big money can be lost.
Well, the hog market, the losses stopped this week. Is this just temporary?
Well, the hog market is, the opposite phase. We're in the liquidation phase. The slaughter or the liquidation was at a 14-year high in the summer this year. So I think the liquidation means that in 2024 we have a better chance for some better prices going forward, Paul.
Let's close with crude because of its impact on a number of things. Is $100 back in the sights?
Well, the good news is for the grain markets, Petrograin. And so we have that bid underneath the market. But yeah, I would say, it's, 90 to 100. It seems we're back to that sweet level again. That looks like the target area.
And if you were betting on the dollar to keep rising, would you bet that?
Well, I hate to bet against the government, against the U.S. And we have a lot of debt, but we're the best of the worst. So I would bet, stay with the dollar. But it's dicey. There's a lot of people that are questionable on it.
You're the best of the best, Don Roose. Good to see you. Thank you.
Thank you, Paul.
All right. Don Roose, everybody. Thank you. Please, Don, hold tight, because we are going to pause this analysis, continue our discussion about these markets in our Market Plus segment. You can find both analysis and plus on our website of markettomarket.org. As you head to the field this fall, take us with you. We want to make sure that you are kept up to date on commodity market analysis and news around agriculture with our 3 podcast offerings. 2 of them come out on Friday, and the third, the MTOM, is released Tuesday. Subscribe or follow where you get your podcasts today. Next week, we look at the nation's first, almost forgotten female veterinarian. Thank you so much for watching. Have a great week.
Market to Market is a production of Iowa PBS, which is solely responsible for its content.
What's next doesn't happen by chance. It happens when researchers and farmers work together to solve tomorrow's agronomic challenges. We're committed to creating what's next, because at Pioneer, our name is our mission.
Sukup Manufacturing, celebrating 60 years of innovation as a family-owned and operated manufacturer of grain storage, drying, and handling equipment out of Sheffield, Iowa. Learn more at sukup.com.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.